Hey guys, this is Jorge with Calloway Tax Advisors doing a video for today, and I know it's dark. I'm not going to claim that I'm the best at making videos, but with the light on, there was a glare on the whiteboard, and I need you guys to read what I'm going to write today. Our address is 5350 Southwestern, Suite 105 in Oklahoma City. You want to pay us a visit? You want to set up an appointment? I'm not all dressed up today because we're kind of closed, not seeing clients since we're in deadline mode. But today I wanted to talk about business structures and taxable entities. A lot of people are asking me, hey, should I be an LLC or should I be an S Corp? Should I be a corporation? They don't really understand the differences between all those things. So I wanted to quickly go over some of those and kind of give you the basics on what it all means. So there are several different ways that you can set up your business when you decide that you're going to start, whether it's a dispensary, a grow, processor, you're going to be transporting, whatever it is you're doing. You can go to the Secretary of State and set up a DBA, which is a doing business as. You name your business something, you reserve the name with the Secretary of State. That way nobody else can do business with that name. A lot of people do that, but in order to get licensed, usually you're going to have to be incorporated now in Oklahoma. So we don't see much of that anymore. Another way that you can incorporate it could be a partnership. So a limited partnership. If you have one partner and you decide to go into an agreement with them and set up your entity that way, that's an option. The one most people are familiar with, it is an LLC, limited liability company in Oklahoma. Again, you can go and register that with the Secretary of State. Your LLC can have one member, it can have two members. I wouldn't recommend you have more than 100 members because then there's some tax implications with that. And then you have your corporation or INC. So if you see a company that says, such and such Inc., that's what that business structure is. So now those things are just the way that you set up with the state for some legal purposes, some protection of your asset purposes, things like that. That doesn't necessarily mean that your business is taxed any specific way. Now, when you register for a tax ID number with the IRS, typically they're going to, by default, assign you entity election. What that means is how your business is going to pay taxes. So I'll show you the different ways that can happen. Number one is a sole proprietorship. That means there's one member of the business and you don't necessarily need it to have its own tax return in any form or way. You simply put your business dealings and income and all that in your personal tax return as the sole owner of that business. Another way is a partnership return. And this return goes on a separate, or this form of taxable entity goes on a separate tax return, which is not your typical 1040. So I'll assign here a sole proprietorship will report their income on Form 1040. Okay, partnership will report their income on what's called Form 1065. You probably can't run into H&R Block or your hoop-de-doo tax person and have them do a business return. Not many people know how to do those. The next entity is what most people hear all the time. It's an S corporation. S corporations file tax return on Form 1120S. S for S corporation, subchapter. And the last one is a C corporation. Some people are not necessarily too familiar with this because historically, there's a lot of advantages to having it. Mostly large businesses historically have been the ones to do that, and I'll tell you the reasons why. You can have any of these be taxed in one of or more of these ways. So if you, just to get out of the way, if you were to register an EIN or tax ID number as a partnership, the IRS will automatically, they would classify you as a partnership return. you're going to have to file Form 1065. So if you guys order your EIN number online and you got a letter from the IRS, CP 575, look on that letter. It'll tell you somewhere in the middle, are you a 1065 filer and when is it due? Okay. An LLC, or let's go back, a DBA typically is going to just be a sole proprietorship automatically when you request your EIN number. An LLC will depend on how many members of the LLC there are. You can file an LLC and have 2 members, 3 members, whatever, shareholders, whatever you want to call it. So if you file an LLC and request an EIN number and you have just one owner, just you, it's going to by default assign you a sole proprietorship filer. Okay. If you have 2 members, you tell the IRS there's 2 members to this LLC, then it's by default going to require you to file a partnership return. Okay. Now this is important because that's the default. If you set up as a corporation and request an EIN number, you're going to by default be required to file Form 1120 or C corporation. Now, you're not stuck with these things, right? You can actually elect what's called elect out of your election or out of your required tax return by asking the IRS, hey, I want to change this. So if I have an LLC, but I don't want to be taxed as a sole proprietorship or as a partnership, I can say, hey, please allow me to tax my LLC as an S corporation. You have to submit a form to the IRS that says, hey, let me do this. Same thing with an Inc. or corporation. You can say, IRS, hey, I don't want to be a C Corp. Please allow me to be an S corporation, right? Same thing with either one of these. You can have a DBA and ask the IRS, hey, please allow me to be an S corporation. And the IRS will let you, within some certain guidelines that have to be met. You have to do it within 75 days. Otherwise, there's another process involved with requesting that. You also have some things that you need to do in order to remain compliant and for the IRS to allow you to file as an S corporation. Now, I'll show you how these entities are taxed. If you take a sole proprietorship, as you know, we all know 1040 is the normal tax return we all file, right? So a sole proprietor, that doesn't right. Sole proprietor goes on Form 1040. Now, the partnership and S Corp returns, partnership and S Corp, they have their own tax returns, but what happens is whatever income is derived from those tax returns also goes to your 1040. So you still file it on your personal tax return. Let's see. And it goes on there with what's called a K1. A K1 is sort of like a W-2. You know, you work somewhere, they pay you regular paychecks. At the end of the year, you get a W-2. If you have an S corporation or partnership, it generates a K1 showing how much money the corporation or partnership made that is assigned to you as a shareholder or member. So whatever percentage income is yours will be reported on a K1. The K1 form goes into your 1040, okay? So that's important. If you have a C corporation, Form 1120, that is the only tax return where the tax on that income is paid by the corporation. So that one does not, the income that comes from that business does not go to your 1040. Now, here's where some of the tax planning comes into play. The income tax rates on tax form 1040 typically are ordinary income tax rates. That is based on your income, your adjusted gross income. So the more money you make, the higher taxes you pay on the income. It goes anywhere from 10% all the way to 37%, depending on how much income you make. So there's different brackets. The more money you make, the more is taxed. Now, those are marginal income tax rates. What that means is if you make X amount of money, not your entire income does not pay that tax rate. It's just from certain thresholds that you start getting a higher tax rate on portion of the income. So there's marginal tax rates and effective tax rate. In order for you to reach a 22% marginal tax rate, you need to is everything over like $38,000, right? Anything over $38,000 pays 22% tax, marginal tax rate. That doesn't mean that all your income is, that your effective tax rate is 22%. In order for essentially your entire income to reach the marginal tax or the effective tax rate of, I calculated 21%. So the effective tax rate of 21% is going to be met when you hit about $61,269. That means if on your tax return, your total income between your business, your job, your spouse's job, whatever else comes through, is over $61,000, your effective tax rate is 21%. Why this is important is because now you have a decision to make. How do I want to tax the income from this company that I have? If you decide that you want it to be taxed as a C corporation, now you take advantage of the maximum tax rate on that C corporation of 21%. If you're following me, what that means is, let's say you make $50,000 from a job, and then you make from a job, and then you make $50,000 from your business. Now, if you put it together, your effective tax rate based on your marginal tax rate could be anywhere in the neighborhood of 28%, 26, 28%, something like that, for the $100,000, give or take. If you decide that you want to split it and you want the business to go on a business tax return and your personal to remain on the personal tax return, now you leave your personal income at the marginal rate, which in this case is going to be somewhere around 18% or so, your effective tax rate. So now you have 18% on your personal, and then you let the company pay the taxes. I don't think you can see that. So personal, 18%, and then the business, 21% on the other $50,000, right? Can you see that? Yeah. So do you want to pay 28% on 100,000, or do you want to pay 18% on 50 and 21% on 50? I mean, I don't have to do that math for you. We all see the advantage of doing that. So every situation is different. There's a lot of other things that go into play when determining how to file your income. If you have dependents, that's important. Your filing status, if you have a spouse or a single or head of household, all those things are important. I think it's important to understand, though, there's not a cookie cutter way that will benefit everybody. So give me a call. Let's set up a time to talk. We'll go over your specific numbers, and I'll show you what all this means to you and your business. Again, this is Jorge with Calloway Tax. I hope this helps. I'm sorry it's dark. If you want to help me do videos, by all means, give me a call. We'll figure it out. I appreciate your help. Until next time, have a good day.